I am a Muslim, I'm an Arab, and today I stand with the Jewish community in Australia. What happened was not a misunderstanding, it was anti-Semitism, it was terrorism. This kind of hate grows when extremists is allowed space and incitement is ignored. The ideology behind the attack is linked to a Muslim Brotherhood-led movement. The same ideology driven the army committing crimes in Sudan. Different place, but the same thinking. In the UAE, anti-Semitism is a crime. Extremism is stopped early. This is how society stays safe. Standing with the Jewish community is not politics, it's humanity. I stand with the victim. I stand against terrorism.
Good morning, everybody. That's probably about as political as I'll get this morning. Welcome here to Monday, the start of the week, and we'll be talking about a lot today. We've got good and bad. We got our Bank of Japan rate decision where I would hope everybody knows that they're going to be raising rates. There's like a 98% probability, so I would assume that some of that is probably priced in. We have the tariffs Supreme Court decision that's still an overhang in markets. We've got that potentially coming sometime in January. Could come sooner. It could actually come, from what I've read, as late as June. But again, they've asked for it to be expedited, so it sounds like it's probably going to be January sometime. Getting those two things behind us would be nice. And then also there's the MSCI decision for Bitcoin treasury companies that will decide whether or not they're going to keep them on the indice. I do not understand why they would not do this. The sheer volumes alone and attention that they've gotten because of Bitcoin treasury companies, MicroStrategy alone would, to me, warrant keeping them. So I would guess that it would have to be politically motivated to remove them. And from what I'm seeing, most likely they will not be. And even if they are, I don't know if it's going to be incredibly consequential. Maybe it gives us a temporary drop and then we settle. But these are the big things that we need to get behind us. I do think I posted about Bitcoin's price action. I think I got it sitting in the bottom corner. It looks like it's not showing too well. Maybe I need to move some stuff around. Let me see here. Okay. All right. There we go. Sorry. I'll get it a little bit better here. It does look like we're bouncing. There is the potential, though, if you look in the bottom right corner, to go up, fail, and then just roll over and then go lower. And so that's what I was talking about before. I posted something. We'll look at it a little bit. I would love for it to just drop into the 70s and get just a really strong blow-off bottom where everybody's like, hey, I'm going to go ahead and get back in. I would love to see that. I love a flush out more than anything. It's one of my favorite things in Bitcoin. When absolutely everybody gives up. I feel like we're close to that. Looking at the comments section, looking at the posts, looking at other influencers in the space, it just looks dead as shit. And again, I've been around since I was around in 2018, 19 when the market collapsed. I was around after the pandemic. When the pandemic happened and we dropped, and then we went up like a rocket, and then we got to 69,000, and then into 2021 we raised rates at the most aggressive rate in history, and then we just took a shit again. I've been around through all of these, and I got to tell you, what the sentiment I'm seeing right now definitely reflects a weekly RSI on Bitcoin that is near oversold conditions, some of the lowest levels it's ever been at. It definitely reflects that in sentiment, and I think that's a great contrarian indicator, and it makes me happy. I'm not going to go through all these things, but I do want to remind you of some of the good stuff. We got even better stuff than I was hoping for. Again, just doing this on Mondays right now. I will look to add chapters. I don't know if I'll be doing that today. I'm going to look to add chapters, and I'm going to try and cut out segments so that people can slice and dice and have maybe hopefully grow the channel a little bit, since I've tried a zero amount to do that. And then at the same time, give people shorter bits of content in case they can't make it. But I don't know if I'll get to all that today. But I do want to say, so again, December 1st, QT ended. The Fed started a little mini version of QE. It wasn't really anything. December 10th, the Fed cut rates by 25 bips, but then they also indicated that they're going to spend about $40 billion on buybacks between now, I think, and the end of May. So, and that's pretty much at the end of Powell's term. So that, and they were very dovish. I mean, we're looking at a dovish Fed right now. So we got the rate cut again. We got the buybacks. All that stuff looks good. Now, again, late December, we're talking about the Senate Banking Committee markup vote on digital asset market structure bill. We're talking about this thing looking to pass too. That could give $50 to $100 billion in capital going into the DeFi sector. But also, December 25th to January 26th, we got SEC clearance of altcoin ETF backlog. All these ETFs are coming through. And one of the big ones, again, modification of the supplemental leverage ratio gives banks a bunch of extra money. If they get $100 to $200 billion in additional balance sheet capacity, they can lend more. And this could give us up to 0.9% GDP growth, which is beautiful too. And that is voluntary in January. It's mandatory starting April 1st. And I don't know why any bank would want to use this and be able to lend out if they think that the economy is going to start flipping around. And I've got a lot of good stuff to show you on that, on why it is. There's a reason why the Dow transportation sector is hitting new all-time highs and literally almost at the highest level it's ever been in history. There's a reason small caps are starting to go up. It's the same thing I've been talking about for a while. People expect rates to come down. TLT finally getting a break today, up about 0.5%. As the 10-year bond is down about 0.55. So we're seeing that flip around. I think all of that is really, really positive. But we're seeing, and again, not just the Dow Jones Transportation, the Dow Jones Industrial. Let's just look at that real quick. All these things are popping off. And so you might see a slowdown in the S&P. You might see a slowdown in the NASDAQ. You might see these things happening, but again, we're just about to get a breakout in transportation. I'm going to talk to you about shipping rejections and why that is a beautiful looking thing. I'm pretty sure this is an Adam and Eve. But the Dow Jones Transportation Index looks great. It looks like it wants to break out to new all-time highs. And some of the data we're seeing behind the scenes indicates that looks good too, and that truckers are actually rejecting a lot of cargo, which means their wages are going up. Maybe it's because we're getting rid of all these illegal immigrants that are killing people on the interstate. I don't know. But that's definitely a positive. And then again, I think the trucking area industry got a consolidation. We've seen some bankruptcies, so we're seeing good stuff happen there as well. And we will be talking about Tesla today. I've actually used the latest updated version of full self-driving with Grok enabled, where I literally could just tell it navigate to this place. And it did it. You could be like, navigate to this place, and then you could be like, at a stop along the way, do this, and it will just do it. And you're talking to Grok the whole time. It's amazing. Couldn't get it to play music, but my daughter was upset about that, but she was excited about all the rest, and I think that's only going to get better. Again, Supreme Court decision. There could be a decision on Lisa Cook's termination. I don't know if we're going to get that, but that would be a bonus if we did. Not even sure Kevin Hassett's going to be the guy anymore. We got Warsh. We'll talk about that. But again, just a lot of things going on. April, I got to say this. So tax refunds, $100 to $200 billion in extra money for people collecting Social Security, making overtime, and or making tips. They're going to get to benefit from a refund coming up this year. Also, too, they'll be able to modify their deductions in order to be able to, or their withholdings to be able to get larger checks next year. All these things are helping drive up those incomes and making it to where they're doing better. We're going to see more of that. We got more rate cut potential. We just got a lot of stuff that I think is really good and that people aren't looking at. I also wanted to talk to this because, again, I wasn't around for it. That's why it's going to be great that we can consolidate. Did she want K-pop? She actually is big into I-pop. It's called international pop. She was J-pop, then she was K-pop. Now she's I-pop. A band called Cat's Eye is her favorite. They evidently won on something called Dream Factory. I don't know, man. I'm learning. I can't tell the difference between them, honestly. Anyway, what else we got here too? Jesse, by the way, this is MB. Oh, YouTube keeps messing up my nickname. Weird, man. Why does it do that? That's strange. Morning, MB. And morning to everybody else here too. Let me see what else. No see the past month. Okay. So some people have been busy. I get it. Yeah, iPop. Now you know. Now you've learned something really valuable. All right, let's keep running here, though. So this happened, I think it was last Thursday, but we got the United States balance of trade data, and this is so great, and I just don't think people are paying attention to this, but it was negative $52 billion. That's a number we hadn't seen since June. For the first time since the pandemic, we're seeing a trade deficit head in the right direction, and arguably going back even further over time. Let me see. I think I have some of this still pulled up. Do I? Maybe. I do. This is actually becoming manageable. Look at here before 2008, 2010. we're getting to levels, guys, that are pretty remarkable. It looked like doom when Trump headed into office. We were down here. We were way down here. It looked like doom. It looked like the United States was failing. It looks like everything's coming from China. And it looked like we would forever be under their nuts. And we're not. We're not. We're breaking away. Don't get me wrong. There's things being redirected to other countries. There's things that are going to some countries and then getting pushed over here. We're actually doing a really good job fighting that. But, Jesse, I'm looking to join FundStrat. Do you have a referral link? Yes, I could probably get that. But I'm loving that the trade deficit is getting better. Our balance sheet is getting better. I know some people were commenting recently, and let me find this. I'll try and find this referral code. I don't want to show everything here, but I should be able to pull that up. Let me see if I can find that. But people were commenting about Trump's over the weekend comments about $7 trillion or $17 trillion in tariff stuff coming in. I just want to be clear. That is not what he was saying. Trump likes to lump in, the amount that people have said that they're going to devote towards the United States for manufacturing. He likes to lump that into that equation. So when he's talking about it, he's not literally saying that we're $17 trillion better off in tariff revenue. I don't know why people seem to think that. That's not what he's saying. I'm trying to do the refers and family thing, and I'm not getting it up. Let me just make sure. I don't know why it doesn't show it. FS Insight's being a little weird. Just give me a second. Oh, I might have found it. Maybe not. I actually haven't been charged for this site in a long time. If I can get this to come up, I will. I'll post a referral link if I can get it to work. Right now, it is not working. If I do get it to work, I'll post something on X and just keep a lookout for a post today, okay? Sorry, that's not working. I don't know why. Real quickly, so economic data today. Let's jump over to this real quick. One thing I want to point out, guys, is if Poland is any indication, if a well-run Western country is any indication of what inflation is going to look like in the future, then it's going to be a really good sign for us. Because if you look over here, Poland doesn't have inflation. They're at some of their lowest levels. I mean, outside of the lows in 2024, they're basically running around target of what they were even before the pandemic. So, again, I think this is just another sign that people are overplaying the inflation card. It's just not as big as what people think it's going to be. Wholesale prices in Germany suck, but Germany sucks, period, and it's only 1.5%. So is it really that big of a concern? I mean, probably not, right? I think that inflation is dead. Job weakening will continue. And a lot of things are going our way. Gold price isn't yet, but I think it will. So we've talked about this for a long time, guys. We haven't really looked at it. You can see where I drew like the oil's going to drop thing. And that's what we're doing, right? We're still under $60 a barrel. We're at 57. That looks beautiful. Maybe we see a little bit of support in the 53 range. But this is good. This is good for the economy. Again, these are base costs for everything. If we look at the dollar, I talked about how it would weaken. The only thing that wasn't happening is seeing the bonds roll over. But we did get a rejection off this level. And my prediction is that we can go down to 92 on this. So we've still got a ways to go. Again, I haven't modified that. That's just the reality of what it is. The 10-year bond, finally, I think, getting ready to roll over. Again, I think what people are looking for here, you can kind of see where this is a resistance line right through here, where it's kind of support over here, support over here, support over here, support over here, resistance here. And I think we just tested it, and we're getting ready to roll over and still fall. This is going to happen because Trump said he wants 1% next year. And really, if things work the way they're supposed to, when the Fed steps down in May, when Powell disappears, and does it seem like Powell's playing ball, guys? Can you guys in chat tell me, is Powell playing ball? I feel like he is. I feel like the rate cut that we got, along with the dovish talk, along with, buying instead of unloading their balance sheet, putting more on it, I feel like that's all pretty dovish. And I think he's playing ball. So if he plays ball, he's going to step down in May, because that's what every other Fed chair has done in this modern time. In the last 50 years, every fucking Fed chair steps down. They're done. He's going to write a book. Mark my words. There's going to be a Powell book. It's going to have some Trump stuff in there just to get the sales up. That's what I see for May. And if that's true, then Trump has the reins fully, whether it's Wharf or whether it's Hassett. It doesn't really matter. Somebody will have the job, and we actually will be looking at a little bit of that too. All right. So again, and you can see how Rick Schmantelli was very excited about this, right? Let's listen to this real quick.
Minus $52.8 billion. That's a better, lower trade deficit than we expected. We were looking for a number closer to $62 billion.
Now look, so he's got to look here at his notes because he's like, fuck, it's been a long time.
And that follows a revised minus $59 billion. Minus $52 billion would be the lightest going back to, wow,
I gotta read
really
that,
going back. Well, my records go back to 1992, and to find a smaller number than minus $52 billion, we're all the way back to June of 2020. 236,000 is initial jobless claims. So
June of 2020. I mean, this is beautiful, guys. This is what we want to see. We want to see our trade imbalances get better. We don't want to be dependent upon China. This is fucking wonderful. We've got a lot to talk about with transportation again, too, so let's just keep going. Let's keep going. Oh, let me go back here. Sorry. So you got Hassett. What is Hassett talking about? He's talking about how the budget deficit will be down $600 billion this year. Let's just listen to Kevin Hassett. He's not lying to you. Again, Trump might not clearly reflect what numbers he's including in his calculations, and then he'll give you the absolute top end of that and then probably add 20%. That's Trump. But Hassett is not that guy. Let's listen to him. Go back here. Volumes.
Evidence is mixed, but the point is that we've got deficit going way down. So right now it's looking like the deficit for this year will be $600 billion lower than it was last year. That really helps lower inflation. We've got the trade deficit cut in half from last year.
So again, they're doing the right things. It's not austerity, but we are cleaning up, creating efficiencies, removing regulations, doing things to get us in a better place. And that's before we use yield curve controls in order to be able to force the long end of the curve down. Trump told you he wants 1%. It's coming.
And so all of these things are things that should continue to move us towards the Fed target of 2%.
He looks sick as fuck. I feel bad for him there, but he still came in and did it. James E. Thorne, my brother, Canadian brother from another mother, said, did anyone notice regulators quietly rearm the credit machine? What does he mean by that? Regulators are quietly shifting the monetary fulcrum back to Wall Street, and almost nobody is talking about it. As QE and QT fades into the rearview mirror, the system is being rewired so that credit creation once again flows primarily from bank balance sheets rather than the Fed's. This is such a key point that I want to talk to. We're issuing short-dated treasuries. We're not doing a lot of money printing outside of that, but the short-dated treasuries are gobbled up by the banks. The banks love that doesn't look good. The banks love the SLR ratio modifications that they're going to be getting at the beginning of this year in 2 weeks, because they're going to be fed a bunch of short-dated treasuries that they can feast off of, and then at the same time, they're going to have the SLR ratio modified to where they're going to have some additional capacity for lending, and so it's just going to give them a really good opportunity to get the credit markets working again. And so instead of just money printing, here's a check, here's a check, here's a check, and not trying to manage our finances, not trying to find fraud, not trying to reduce expenses, not trying to create efficiencies of the last regime, just money printing and lots of inflation. Instead, what we're doing is making it to where we're allowing the credit engines and the lending to occur and to build up, something that has not happened for over 3 years. I'm using a lot of hand gestures today, but there's a reason for that, because this is a really important moment. We've talked about how the manufacturing sector has been crushed for over 3.5 years. We've talked about how the real estate market has been crushed for over 3.5 years. We've talked about how commercial real estate has been crushed, not just residential. We've talked about how the lower income spectrum has been crushed because they hold the most debt. They have no wiggle room. They get slammed with all the late fees and over the limit fees. These people survive paycheck to paycheck, and they deserve fucking better. And what did they get? They got a bunch of illegal immigrants taking their fucking jobs and causing wages to go down because they were willing to do it for less. Why were they willing to do it for less? Because they're getting government subsidies that are paying for just about everything, and they're living high on the hog, driving around in fucking Mercedes and BMWs, while other people suffer that were born into this country. I'm not going to go into a really deep diatribe. I think that's probably enough. There are good people that are illegal immigrants that probably live here too and just want the American dream. I get it. But here's the problem. We were on an unsustainable fucking fiscal path. And Democrats might not give a shit about that, but we do. We want to fix it because we realize that there's a golden age upon us. And what we need to do is start allowing banks to lend again, because we have massive amounts of innovation in front of us. We're going to talk today in a minute here about how people say with open AI that they're getting at least a 10% improvement in their efficiency in the day, 10 to 20%. So they're gaining time back. They're gaining an hour of their day because they're using AI systems, and that's only getting better. And so we have businesses that are turning into AI companies overnight, and we can't starve them of the credit they need. We've already had a bunch of ghost shell dead fucking companies die since the pandemic. It happened after we raised rates at the most aggressive rate in history, right? Or at least one of the most aggressive rates in history. That killed off a lot of companies that were zombie companies and that deserved to go away. They went away. And now we have a bunch of young people that are excited, or just people that are excited about technological innovation. They're looking at AI, they're looking at robotics, they're looking at genomics, they're looking at all these spaces and how quickly things are changing. Even in their own legacy, old-ass businesses, they're going, why do we have this fucking CRM? Why do we have all this shit? Let's contact Palantir. Let's figure out whatever company we should be working with or products we should be working with to create efficiency, to lower the head count, but to make things better and make things more efficient. And then they go from lowering the head count to adding people because they realize that there's opportunity here for them to be able to tackle the markets. That is what I believe we're heading into 2026. Yes, there could be more painful data, but eventually bad becomes good. That's how people are going to look at it. As long as inflation isn't fucking crazy, and it hasn't been, and Trump keeps winning, and he has been, then we're going to see this rebirth, because we're going to get yields down. Even though it hasn't happened yet, we're going to get yields down, and we're going to see gold start to top off. And it hasn't done that yet, but it's getting real fucking close, man. I don't think we're going to close the month above 4,300. So bookmark it, mark it here. I don't think we're going to close above this. Again, we're not at the all-time high. That actually happened. Let's see, when did that happen? That happened over here when I called the top on October 17th. That was a month ago. Now, could it go above it? Sure. But this is not necessarily what you want to see right now when you have a monthly RSI of 93. Why don't you want to see that? Let's go back to the daily again. Because what we're seeing looks to like the naive eye as something like maybe this, an ascending triangle, right? But from my experience, this is not a good pattern. Why is this not a good pattern? Because we keep testing this level over and over and over again, and you actually probably just need to adjust it just a little bit. But we keep testing this level over and over and over again, and sure, we bounced above it. Could we go higher? Sure. We're over $30 trillion in a market cap, guys. Like, this is a big fucking number. But from my experience, this is going to be more likely a double top and then a breakdown. And again, this could take into January, February, and then a breakdown. And then maybe it tries for a triple top and then it breaks down. That's my experience when it comes to things like this. I believe that's the most likely scenario. And if I look at the Bitcoin to gold ratio, it kind of looks like it's doing a triple bottom. I thought it was a double bottom. I'm going to say it's a triple bottom because I don't think, again, gold is going much higher. And I think Bitcoin has fallen a lot. And so I think what we're more likely to see is a flippening of these two. This is what math tells me. This is what history tells me, going back over very, very long periods of time, sometimes decades, sometimes longer. So I do believe, like We didn't get very far on James' post here, but I do believe he's right. I think we're going to start pushing credit. Let's read the rest real fast. Rewired so that credit creation once again flows primarily from bank balance sheets rather than the Feds, with a political veneer that this time the focus will be on financing productive capital rather than engineering new financial weapons of mass destruction. Again, get money to the companies that want to build. Let them fucking build and make America great again. So far, it's been the big guys that have been doing well. It hasn't been the little. But man, if the Russell 2000 tells me anything right now, it is that it is time for the little guy as we break out from a trend that goes back to November of 2021. This, and again, if we change this a little bit, I think we got a nice bounce there, a wicked bounce, but let's just draw this as like an ascending triangle because there is some semblance of that, right? So even here, we're still closing above that. If we're above this on the monthly time frame, this is a breakout. The small companies are finally getting relief after 1,463 days of pain and suffering. These fucking companies are about to be reborn. I think that's a good thing. I think gold can't survive in that realm over a longer period of time because it's already up so much. It's already up so much. And at some point in the next year or two, I do think that we'll end up seeing this thing come down to 3,500. Why? Because why would you put your money into fucking gold when you can invest in a small cap or other things that are going to do really well and outperform in the years ahead because people are underestimating all of the goodness that's happened. The no tax on tips, overtime, Social Security, and all the benefits that those provide, the deregulation across the housing sector that projections say could be 10 to 15% reduction in cost right there, the lowering of rates, the increased inventory, incentives to build everywhere across America. All these things, there's factories being built everywhere, and eventually people will start to understand that I did really well in gold. I made 160, or what is it, 100 and from the top here, 170% from where the bottom was in 2022. If you made 177% off of a $30 trillion asset, let's just compare that. Everybody's like, oh, Tesla's too expensive. Literally changing the world right now at $1.5 trillion. And people are like, I had people tell me that they're going to get a 6X on gold. And then it's going to be, I'm like, what the fuck are you? You're talking about 20,000 now? You see that in the next year or two? What the fuck are you actually talking about? If you believe that, you're saying that the world has completely fallen apart. It's just over. China's at war with us. People are dying fucking everywhere. Maybe we drop some fucking newts. Gold is at $20,000. That is not going to happen. You're not going to have gold be a $200 trillion asset anytime soon. It's just not a thing that's going to happen. Or even 100 trillion. You're just not going to see that anytime soon. So what did they get? They got 10,645 Bitcoin MicroStrategy for $1 billion. Do we know what the breakdown is? If you guys know what the breakdown is as far as what vehicles they used for the purchase, please let me know. But that sounds fucking great. MicroStrategy is only up 0.05% in pre-market. It looks like the HPCs are kind of flat right now. It looks like some companies like Bitcoin treasuries are doing a little bit better, I think. And BitMiner's up 1%. I don't know. Things are kind of flat. We're not really going anywhere. I'd say that's a win by default. I love that MicroStrategy is still buying. I think anybody that's waiting for the death of MicroStrategy is going to be waiting a long fucking time. I remember everybody last cycle talking about how they were done, and Michael Saylor laughed at them because he's like, guys, we could get down to Bitcoin fucking 2,000, and all I would have to do is I would have to borrow some money from my own personal billions to be able to pay the bill, and he's in a much better situation now. STRD was a good chunk. Cool. Was it mostly like all these investment vehicles, or was any of it actual equity in stock? Good morning from Taiwan. Good morning, sir. So yeah, I think the Bitcoin gold ratio is going to have its bottoming. I think this triple bottom is a really great sign. I think gold's going to top, even though people don't want to hear that. I think the 10-year treasury is going to continue to roll over. And I think we're going to see a beautiful 2026, guys. Remember, Micron is running a forward PE of like 14 or 15 right now. They got a PE ratio of 29, but you've got things like Walmart that have a PE of fucking 40. So what the fuck is happening here? And their forward PE is like 12 for Micron, 12. So they're crushing it and only looking better. And yet Walmart has a much higher valuation when you're looking at, profit to earnings ratio. It makes very little sense. They're getting a premium because of their longevity and just being a steady Eddie, I think. But I think people are going to, again, get excited about some of this other stuff real soon. Let's go back over here. I'm barely getting through this. We need to move faster. 90% common, 10% STRD roughly. Okay, all right. So they're using common shares. That's cool. That's what I would do too. I can't remember let me see what they were before, and then we'll get back to this. So what was their stuff sitting at? Let me go back here. Smarter web. Ugh, I can't touch that anymore. I've got plenty of it. I still don't feel good about it. Is this thing going to update? I don't even know. Whatever. I don't care that much. But yeah, I'm sure they were operating where they were above their NAV, and so that's probably why they went for it. It says under the new Trump-Bessent regime, the baton, and remember at the beginning of this last year, guys, I told you guys Bessent was the only thing that mattered, and Powell didn't matter anymore. And my biggest thing that I'm guilty of is being early. And I got to say, I think the year ended up that way, right? The baton is being passed back to Wall Street, and the long area of Keynesian demand management and balance sheet experimentation is being presented as something to be wound down rather than perpetuated. We're not saying print money printer go burr, this is the best thing ever. We're saying, again, create greater efficiencies, get money to the companies that want to grow, and make sure there's incentives for the banks to give them money to grow. This is such a good time to be around. From QE back to credit. Before QE, money growth was largely a byproduct of private credit expansion, with Wall Street acting as the de facto engine of monetary creation. Again, banking, think banking. And I think Tom Lee has become more bullish on banking recently, too, and talking about AI narratives with them. So, but again, banks have an opportunity to start to really move the balance sheet. As reserves normalize and the Fed edges towards a steady, ample level, the justification for ongoing QE or QT weakens. It's gone, leaving the experiment looking more like a decade-long detour into central planning than a durable framework. Regulators loosen the reins. The more important story now is regulatory rather than monetary. Capital and lending constraints are being relaxed at the margin, which modestly enlarges banks' capacity and incentive to extend credit, particularly to riskier borrowers. Again, the rejection rate, guys, on lending was horrible. The low end was basically getting denied on everything. At the beginning of the year, I was getting denied with 800 credit scores. Later on in the year, let's fast forward to like July, August, I'm good now. But bottom end lenders are still getting a massive amount of rejections. That's going to change. These people that have been getting crushed are going to start getting loans again. Do you think that makes them feel better? When they get that tax return at the end of the year, that's a nice one. When they can modify their withholdings in order to be able to increase their paycheck. When they start getting loans again from the government. Do you think that makes this lower end cohort feel better or worse? Tell me in chat, guys. The more important story now is regulatory rather than monetary. Capital and lending constraints are being relaxed at the margin, which modestly enlarges banks' capacity and incentive to extend credit. I don't even know if he's focused on the SLR ratio here, but that's happening. Particularly to riskier borrowers and SMEs that had been pushed toward private credit funds. In the U.S., the Fed, FDIC, and OCC have finalized changes to leverage capital standards that reduce required Tier 1 at large holding companies by an estimated low double-digit billions, freeing up some balance sheet for lending and market making. On top of that, the OCC and FDIC have rescinded the 2013 leveraged lending guidance, removing a key supervisory overhang that had discouraged banks from holding or originating certain leveraged loans and ceding ground to non-banks. Unpopular truth about money. This isn't a technical tweak. It's a return to the system's underlying plumbing. The Bank of England spelled it out in its 2014 quarterly bulletin article, Money Creation in the Modern Economy. In the modern system, most broad money consists of bank deposits created when commercial banks make loans, not pre-existing savings being lent out or reserves being mechanically multiplied. When credit standards are eased and risk appetite returns, the money supply accelerates endogen whether central bankers like it or not. Princes, not technocrats. So I love this because what he's saying is the central bank doesn't matter as much, and the banks will start to lend based upon the changes that have been made. I think that's 100% true, and that's great. That's great because it just gets the pipes moving again. And do you think things get worse next year when manufacturing is starting to take off because all these plants have opened up? Howard Lutnick got done saying that he thinks that the manufacturing renaissance is going to be started off and driven by AI. I agree with that wholeheartedly. All the smartest people I listen to do too. So and these are like Elon Musk type people. These are, Peter Diamandis people. These are Jordi Visser people. These are really smart people that understand what's going on in AI and what's going on in the future of technology. And they all feel the same way. So princes, not technocrats. As Richard Werner's Princes of the Yen, Japan's Central Bankers and the Transformation of the Economy, first published in the early 2000s, argued in the Japanese context, liquidity creation has always been a political and institutional choice, toggling between central banks and private banks, depending upon which is being empowered at a given moment. He said, the upshot, today's recalibration shifts agency away from the Fed's balance sheet and back towards Wall Street's. Even as the official narratives still obsess over basis points and dot plots. As after the Second World War in the new Trump era, the Fed is increasingly cast to the chaperone deciding when to take the punch bowl away, while the business of creating money and credit is once again being handed back to Wall Street. I think this is fucking amazing, and I think it's so true. And this is probably one of my favorite articles over the weekend. And James has been spitting fire, guys. Right and left. Kirby said, I need Bitcoin to chop off until January. A tax loss harvested my dad's. Okay. All right. Well, I'll call somebody and see what I can do. Loss on crypto. When people realize you were right about Tesla in about a year or two, fudge, bro. Yeah. Yeah. When they see $900 and $1,200 Tesla prices, they're going to lose their minds. But James E. Thorne, a new axis of power, Warsh, Druckenmiller, Stanley Druckenmiller, Besant, and the next Fed chair. So Stanley Druckenmiller and Besant are good friends. They blew up the Bank of England together. And Warsh has an interesting history. We're going to listen to a little bit of his video today as well. But this says, the center of gravity in U.S. economic policy is shifting from isolated personalities to tightly connected network. Kevin Warsh, Stanley Druckenmiller, and Scott Besant now aligned. So this is interesting. Kevin Warsh has had very different opinions about how the Fed should be run in the past. Very different. And he is not somebody who's seen as like a hack that will just print money. He is not seen that way at all. He's not that guy. So it's interesting that he's becoming a possible new candidate over Kevin Hassett. We'll see if that's the case. He is pretty brilliant, though. But I don't know what's going on behind the scenes. I'm interested by it. But yeah, Kevin Warsh, Stanley Druckenmiller, and Scott Besant now aligned under Trump. They're attempting to end a 15-year experiment and Keynesian demand management and replace it with a supply-side regime built on productive capital rather than financial engineering. I think that's also great. Get people lending again. With the next Fed chair, and that might create a bubble, but it's not focused again on just, hocus pocus. It's posted on really building in America, and that bubble could go on for years. I just think people need to understand this. With the next Fed chair decision front and center, that network suddenly matters a great deal. Read the room. For years, the playbook was simple. Fiscal stimulus plus ultra easy money to prop up demand. Again, just pushing low interest rates, getting demand up, but again, not resolving underlying conditions within the economy or the government. I think those are the big differences between this new regime and the old. Producing an asset-rich, income-poor economy. Again, a K-shaped economy. People have been saying that for a long time. It's been that way for a long time. But weak productivity and uneven wages, and it got way worse after the pandemic. Warsh, Druckenmiller were early insiders to declare this model exhausted, arguing that QE and financial repression distorted markets and discouraged real investment. So this is the stuff that I like about these two people, is that they're both really fiscal hawks. And I don't want to say that they're pushing towards austerity, but they definitely live a different regime. Where was I? I just lost my fucking place. Let me look here. Valuations permanently. Personal links between the Fed. Where did I go? Damn it. Let me go back here. Let me go in here. Figure out where I lost my place. Simple fiscal stimulus, easy money. Okay, here we go. Warsh and Druckenmiller were early insiders to declare this model exhausted, arguing that QE and financial repression distorted markets and discouraged real investment. We don't want that. We want real investment. Their critique was not anti-market. It was warning that valuations cannot permanently substitute for capital formation. Besant now provides the fiscal and industrial counterpart, drawing on Hamiltonian tradition. His strategy emphasizes deregulation, investment-friendly tax rules, and targeted tariffs to pull production and capex back on shore, allowing private model capital to profit from building in energy, manufacturing, and technology instead of riding policy-driven multiple expansion. Again, we don't want it just to be policies that are driving it. We want there to be credit lending into the areas that want to build, and then the banks will look and say, hey, should we lend them more money? Are they doing a good job? Are they building a bunch? Did things look good with this company? Let's give them more money. They're going to do that, especially smaller banks are going to do that better than the government ever could, and I think that's the focus here. Private capital to profit from building in energy, manufacturing, technology, and instead of riding policy-driven multiple expansion, government set the rules, the private sector carries the baton. The personal links make the Fed race especially intriguing. Warsh and Druckenmiller have worked closely together, blending the vantage point of former Fed governor with one of the most successful macro investors of the era. Besant comes from the same global macro lineage, so Warsh's and Besant's views are joined not just by ideology, but by shared mentors, methods, and market experience, with Druckenmiller as the junction between them. So this is interesting. So maybe this is a play between Besant and Warsh and their relationships in the past. In this context, Warsh's potential role as Fed chair is pivotal. He is one of the few candidates whose record already fits Besant's project. Skeptical of balance sheet activism and mandate creep, but realistic about managing a high-debt, dollar-centric system without shock therapy. They broke the Bank of England. They can certainly fix ours. A Warsh Fed could narrow the mandate, normalize the balance sheet over time, and still cut rates in a way that supports a supply-side agenda rather than another round of financial engineering. Trump provides the political cover. Besant runs fiscal and industrial levers. Warsh anchors a more focused, more attuned Fed. Druckenmiller bridges central bank and markets. Now, can you see why Warsh would make a good Fed chairman, and why he would read and work well with Besant, and why the Druckenmiller link makes the structure so compelling? I mean, it's pretty good. It's a pretty good post. Let me know if you guys have any thoughts. I put, we won't let it happen. Few understand this. Zero Hedge said, there is no normalize the balance sheet ever again if the Fed did QE light with super core inflation at 3.2%, a small wobble in repo rates, spooked Fed into buying 40 to 60 billion in bills. That's it. It's over. Just imagine how big QE will be in the next recession under Trump. It would be huge. We have a debt to GDP over 100. I would argue that we can't have a recession. That's why we just keep pumping the economy. But if we're getting it to where we're actually building and creating a faster, stronger GDP versus our debts, then it doesn't matter, and we can get that number better, and then maybe we can avoid the next recession or make it to where we could actually have austerity and not destroy America. But for now, we have to build. We just have to build and build and build, and that is the focus. I put the smartest investment accounts on X. All the good guys are still very much under the belief that 2026 is going to see much higher prices. Honestly, Tom Lee, Kathy Wood, every brilliant investor, Paul Tudor Jones, all these other guys are saying the economy. Even if you don't believe in what Trump's doing, things are going up. If you do believe in what Trump's doing, things are probably going up. So That's what I see, and that's what these people keep talking about. So I'm going to focus on that. Even though crypto Twitter has their panties in a fucking bunch, I don't care. I'm not. I don't want to be emotion or sentiment driven. I want to be driven by facts. And I think it's very easy to argue that Bitcoin hasn't went anywhere and done what it was supposed to do, and that the 4-year cycle is broken. Here's Warsh, by the way. We're going to listen to him. And that manufacturing is going to pick up in the future because it's been in the dumps for 3.5 years, along with residential real estate and the entire lower half of our economy. Let's fix it. When people realize, oh, yeah, no, that was the same comment. If you guys want to talk and chat, feel free. It's okay. Let's listen to Warsh real quick here because this is important to listen to. And yeah, Quinn posted this. I love these guys from Blockworks. Thought you'd like this, Tyler. And one of the top candidates for Fed chair recalling a story with a previous FOMC called a QE a Ponzi. So this guy isn't just about mismanagement of government and letting the shit just keep going. He wants to fix it. And so that's what I think is interesting. I still love Hassett, though.
Let's just go back to the essence of quantitative easing for a moment. QE1, which, by the way, at the time we tried to market it, this worked for about a week, as credit easing. That was our preferred nomenclature. QE sort of took off without us. And what did we say then? We debated internally whether to do this. And the story goes something like this, Peter. Secretary Paulson, he's issuing bonds on Monday and Tuesday. What do you say we buy them on Thursday and Friday? And I don't believe in betraying the confidences of those that were sitting around tables, but I recall one person saying, well, that sounds like a Ponzi scheme. What else do you have to save us from the global financial crisis? Explanations were given. Small versions of this were done by the Bank of Japan about a decade prior, but nothing quite like this. And we weren't quite sure how it would work, but it turns out it worked, and it was radical at the time. Now, if you turn to economic textbooks, even introductory economics, they talk about this as like standard operating procedure. It seemed like a roll of the dice then, but we were in roll of the dice time, so we took it. But that was QE1. I supported it, and I supported it with many colleagues under the view of we're going to put this very dangerous, risky stuff back behind the covered glass until there's another crisis.
And they never did.
We really never did that. So the story you were going to tell about the subsequent QEs during a period that I would say was reasonably strong growth, reasonably stable financial markets, reasonable periods of stable prices. We started doing it for all seasons and all reasons. And in so doing, we raised the bar for when another crisis hits, because whatever you were doing couldn't possibly be enough. I should only note one other thing. You're cleansing my biography, and I should be grateful. I resigned.
You did?
When QE2 was launched.
In 2010.
And I left in early 2011. My colleagues, including Chairman Bernanke, who I mentioned, for whom I had great respect as a warfighter, he and my colleagues at the Fed decided that we should keep on doing it.
On what grounds? If you could make the best argument for their case that you could, what would the argument be?
So we don't see any costs. We have found a free lunch. Look around. Asset prices are higher. Markets are filled with more liquidity. The economy is good. And gosh, if we take it away, we don't know what would happen. And in some sense, they broke, in my view, the bargain that was struck. Let's just go back to the...
So this is somebody that, again, is not looking just to create the next Ponzi QE, which I think is good. I think this is what we want within our economy. Kirby was saying that he's got 60 to 70% of his account in Tesla. I think that's going to do really well. I think you could get a doubling this next year. I'm shooting for more than that, so I am in other things as well. But I do think that, again, you could get a doubling going up to the 950 level. I think that's totally possible. We're getting ready to break out of a trend line on the weekly time frame that started back in 2022. So, I'm sorry, the end of 2021. So again, all around the same time, like that the raising rates, the most aggressive rate in history, destroyed Tesla, destroyed Bitcoin, destroyed all these markets. We're getting ready to break out of that on Tesla right now, which is super fucking exciting. So if we get above like 465, right around this range, where we had the golden retracement zone, 465 to 67. If we get above that and close that, I'm going to be so bullish because, again, that's where we hit. I sold hard over here, and then I probably bought too aggressively into this dip, and then used the wrong vehicles for it. 2X funds are just garbage. But now we're up here. We've done well. Tesla's actually done well. People are happy. If you bought Tesla from March of this year, guys, you were happy, right? Because you were down here in the 200 range when Tim Walsh was being a douchebag and saying, oh, hey, it's going down like crazy, guys. And now you've doubled your money, and you could double it again next year. So Tesla is definitely, I think, going to outperform the S&P, the NASDAQ, and all those things, and people are going to start to talk kindly about Tesla because I rode around in a vehicle that talked to me the whole fucking time and did whatever I asked it to, and while driving the fucking car. So if that's not impressive, I don't know what is. The robots are coming. We're gonna have a Fed chairman that knows what they're talking about, whether it's Hassett or whether it's Warsh. Doesn't really matter. And we're doing other things that are right too. We're deporting millions of illegal immigrants which will help bring down prices dramatically for home buyers. Forcing rates lower also will help with the process. So again, median age of U.S. home buyers. If we're looking here, first-time home buyers has done really fucking horrible. So I just want to argue this, guys. From here, going all the way back to the 90s, a period of what, 25 years, 27 years, homes weren't getting that unaffordable for first-time buyers, right? It was the pandemic that did that to these people. It's what fucked you. And since that time, too, again, if we just kind of look over here, sure, repeat buyers has been going up in age because, again, these people have made a bunch of money. Maybe they bought a second house. Maybe they bought a rental. Maybe they bought that lake house they always wanted. This makes sense that this is going to be steeper, in my opinion. But first-time home buyers should be way the fuck down here in the 30 range. They shouldn't be 40. And we're going to fix this. We're fixing this with deregulation. We're fixing this with rates coming down. We're fixing this by getting rid of illegal immigrants that should never have been here to begin with. And because of that, this is going to get better this year. And for the first time in 3.5 years, this thing looks like shit because we stopped lending and we didn't build anymore. And then we allowed a bunch of illegal immigrants to come in. We fucked these people, but we're going to fix this. That's what's coming next year. I put, what if America lets China... Everybody hated this one. Whoa, people hated this one. I got 87 likes out of 16,000 views. Bunch of people yelling at me on this one, telling me I'm an idiot and that gold is going to $200 trillion. But I said, what if America starts silently dumping gold? And the reason I say that they can do this silently is there are audits that go on, but like an official audit of our gold reserves has not happened in a very, very long time. And so I said, what if they start silently dumping? And this is just one point. There is a bill that could go through that I think will go through that will allow you to pay your taxes in Bitcoin, which maybe I'll do this next year. Why would the government do that? For their Bitcoin reserves. I had not even thought about this, but it's fucking brilliant. If they want a bunch of OG Bitcoiners to give them Bitcoin at a cheap fucking price, you know the best way to do that? Have them pay their taxes in it. This is a way that, again, doesn't impact everything or anything. It doesn't require congressional approval. They can just pay their taxes in Bitcoin and then not be subject to capital gains on those taxes. How many OGs that have a shit ton of Bitcoin do you think will do that this next year? I'm going to say a lot. And that's brilliant. But maybe we start selling gold slowly too. We don't know how much we have. We just know that they don't want to give us an official audit number. Why is that? It's either A, we don't have as much and they're trying to hide that, or B, we have plenty and they're trying to hide that too. It's one of the two. But what if we slowly started to sell our massive gold reserves and started to dip our toes silently into Bitcoin while allowing people to pay their taxes in it, while confiscating it whenever we can? I think this is possible. Look at the gold buying here, guys. China International Reserves. Look at... Why did gold go up? Because the money printer is going burr in China, a country that is utterly unsustainable. And they went from 100 billion in probably 2023 to 311, over $200 billion, $211 billion. They went up, they increased their holdings in gold reserves by 200%. 3x. So everybody's excited about this play, but guys, it's just China, and China's going to be in a world of hurt. They are. So how long does this play work? You guys tell me how long it works. It's a $30 billion asset. Do you think you're going to make another 100% on gold? Or do you think it's possible that if we reignite the credit engine, people are going to be investing in small businesses again and the economy is going to actually grow? And then people are going to be like, why the fuck am I holding an asset that isn't going to go anywhere for another decade or two? Why not put some of that into Bitcoin? People are saying that's going to go up again. Why not put some of that into the 20-year TLT? Why not do that, right? Why wouldn't I do that? Bonds have had a rout that was one of the worst since the 17 and 1800s. They're still down over 51% from where they were when they peaked in April of 2020. Isn't this a good time for me to get something like that? get my 3 or 4% locked in, or 3.5% locked in, and then and do that with some of my cash position and just sit on that for a bit and maybe get a 20% pop on top of that because of what this thing can do in the next 6 months. I think that's probably what's going to happen. Again, 6 months to a year. I think by January, I would be surprised if we're not in the low threes, or even lower on the 10-year. I think we're gonna create that, but again, we're doing the things behind the scenes to make it to where this isn't just a Ponzi this time. I said the business cycle flipping bullish for the manufacturing sector would be a great sign to help risk assets along. I do expect this to happen early next year. This is bull theory. He said the reason this is the reason why we didn't see alt season yet. It's because the ISM manufacturing PMI is still in contraction territory, and that you can see, and he gives a bunch of reasons why. You can see why when it expands, so does alt season. So again, this is the this is the PMI for manufacturing, and you can see that when it really starts to break out here above the 50 level, we started to see, like, shortly thereafter, alt season. And again, over here, it broke above 50. Alt season came shortly after that too. Just making a correlation that, guys, maybe we need the economy to be doing well. Maybe we need real estate and the manufacturing sector to be doing well in order for us to get an alt season, because people have to be doing well if they're going to take a bunch of money and buy a fucking meme. They do. They got to be very gambly, right? And we're just not there yet. Paul Tudor Jones talking about his plans for this next year. I think this is a good one to listen to.
Crypto, and my guess is that I think all the ingredients are in place for some kind of a blow-off. Will it happen? Again, history rhymes a lot, so I would think some version of it is going to happen again. Right. If anything now is so much more potentially explosive than 1999. 1999, we were looking at a rate hike in November. Now we're looking at a rate cut. We were looking at 4 more rate hikes before we actually topped in 2000. Now we're looking at 3 or 4 rate cuts, probably at least. So you have
this is a little bit older of a video, but it's important to see. And again, a lot of these things have happened already.
Monetary policy that's going to take us to real rates of 0 or less, probably, depending upon the next Fed chair.
I think at least 1%. Trump said 1.
Fiscal policy, we had a budget surplus in 99, 2000. Now we've got a 6% budget deficit. So that combination, that fiscal monetary combination, is a brew that we haven't seen since, I guess, the post-war period, early 50s, something like that. And that was...
Here, I'm going to let you guys listen to this. Is 3 more minutes. I'm going to hit the bathroom real quick anyway, so give me 1 second. I'll be right back.
Crazy times, right, coming out of the war.
You think that most people who are watching us now, you need to be in this market now. But then the question, as I said, is you have to jump off the train before the train crashes. If you're suggesting the train is going to crash.
I'm not suggesting the train's going to crash. I'm suggesting that we're in a period that's conducive for massive price appreciation in a variety of assets. Will it happen or not? I don't know. There's, if you kind of just look, if you just think about the leverage that we had in 1999, you look at margin debt, and then you look at today margin debt, but you have to throw in leverage ETFs because people don't use margin like they did back then. We're probably a little more elevated than we were in October of 99. It will take a speculative frenzy for us to elevate those prices, right? It will take more retail buying. It'll take more recruitment from a variety of other.
I think retail buying kicks in, guys, at the beginning of this next year, once people start to realize that they're sitting in a better financial position. And again, maybe that's not even until February. I don't know. But once people start to realize that their tax returns are going to be higher, once they realize that their paychecks for next year are going to be better, once they start to realize that lending's getting better and they're able to refinance and not get rejected, I think all those things get better.
From long-short hedge funds, from real money, et cetera. It'll take a combination of those things. It's not going to go up without flows and without a story. The story's there. It's the combination of the most unique and aggressive fiscal and monetary conditions that we've ever seen.
Okay, if you're right, who are the winners then in that, and who are the losers? Because right now we're looking at NVIDIA obviously being a major winner. Even AMD today major winner, but there's this unique arrangement that's almost circular.
The circularity makes me nervous. I would say, and I'm going to think of it in broad terms, I think what the markets are telling you, this is an inflation story down the road. If you look at the...
We got the manufacturing survey too, guys, so we'll look at that right after this.
Biggest winners, right? The biggest winners are gold. I think it's up 46, 47%. Bitcoin, I want to say it's up 50 or 60. I'm not even sure. There's a Morgan Stanley basket that's a retail flow basket that has all the meme stocks in it. It's up 67, 68%. So it's really what retail jumps on. So crypto, digital gold, that's obviously something that's very, very appealing.
And does that mean you're jumping on all of that right now?
Well, I'd want to have positions in all of it, for sure. So if you said to me, what are going to be the winners? Again, we have...
This is with Bitcoin at 124,000 and gold still at 39.
This race, the race realistically is certainly to the end of the year because that's when everyone marks institutionally. And then you have to figure out what's going to go on in next year. So what would I want to have? I'd want to have a combination of gold, crypto, probably the NASDAQ. I think... I want to say that I've said that before, and I think that's still the right one. And I think whatever the fastest horse is at this point in time probably has a good chance of being that on deck 31.
He also said that he believes bonds are going to be good for next year as a safety play.
Well, what
in another video.
I'd want to have.
All right, let's keep going. Let's look over here. Economic data. Let me see if I got the Empire survey. Manufacturing index, negative 3.9. They were expecting a 10 to 11 from consensus and forecast. So again, this is another reason, if anything, for the Fed to cut. And I think the reason why these numbers are so bad is because it's the rollover effects of what happened with tariffs. Because companies that are at the smaller end of the spectrum, manufacturing spectrum, have really been crushed. And let's read the full thing here real quick, just to make sure that we're getting it all. Sorry, I have a cough drop in my mouth too. But manufacturing index, U.S. dropped to 3.9, 1 year high of 18.7 in November and worse than forecast of 10. The survey returned to contraction after rising after the past 2 months. New orders held steady while shipments decreased modestly. So new orders, okay. Shipments, okay. With index dropping 23 points to negative 5.7, the inventories index came in at 4, pointing to a small increase in inventories. Delivery times quickened, unfilled orders declined, and additional supply availability worsened. Employment increased modestly, and the average work week edged up. The pace of both input price increases and selling price increases moderated and remained elevated, but remained elevated. Capital spending plans increased somewhat. Firms grew increasingly optimistic and expect conditions to improve in the months ahead. That last line is the part that I care about. So I think if we're getting it to where, again, January 1st, we're allowing it to where banks can start using the modified SLR ratios. And so they'll be able to do lending, where we've got the Fed doing buybacks and not doing QT anymore. We've got all the right conditions. And then you got the manufacturing sector saying, hey, we're starting to get really optimistic about what's coming ahead of us, though. And then you give them the ability to borrow to increase CapEx. And I think things are going to get really interesting heading into next year. Let's keep going. I wanted to talk about this too. Trump accounts, guys. This is fucking awesome. We have $1,000 Trump seed into these accounts. This is how we prevent socialism in the future. I just want to reiterate this. Having kids be able to have investment accounts when they're born, and then by the time they're 18, they can cash these things out and have a start or a foundation to build their fucking lives is beautiful. Michael Dell wanted to get it up to from the 0 to 18. It's just been confirmed that Trump accounts can grow to $191,000 from 0 to 18, and then to over $2 million up to retirement, with the maximum contributions of $5,000 a year. And then you got Trump doing the Trump seed money of $1,000. You got Michael Dell doing $250. Michael Dell, though, was focused on giving a larger range, I think 0 to 10 years old, across poor to mid demographics across the country. So they gave a bunch too. But people can give to these accounts and help children be able to build up their accounts and have a bunch of wealth. And I think that's going to be really awesome. Dew said gold and silver mining are exploding because of hyper seller prices. Just look at Caterpillar stock. Very soon, a lot of gold and silver will float into the market, and that will accelerate the price down. I agree. All right, let's keep going here. NASDAQ, let's see here. This is November 30th. I don't want to go back too far. Let's go over to, I got to go to Tesla next, and then we'll talk about Bitcoin and other stuff too. This is possibly the most significant achievement in Tesla's history. After years and years of development, Tesla finally released FSD unsupervised on city streets. How does the company official account announce the event? It just tweeted, just saying. And this is so cool, guys. So these cars are driving themselves. I got the latest update. It's amazing. Again, I told my daughter for years that eventually you'd be able to talk to the car and tell it where you want to go. And it's better than that. I can literally ask Grok about anything while it's driving me around and then be like, oh, hey, I changed my mind. I want to get some coffee. Is there Starbucks near here? And it will say, yeah. And then you can say, oh, can you add that to the path? And it will add it. And then you're off to Starbucks while you're continuing to ask it questions about something you're trying to research. This is phenomenal. Like, this is crazy. And then you have the competition. Large portions of China, I said, the EV sector are going to die in short order. So this is Ming in China, right? I think Ming, you're in China, if I remember correctly. Let me see, global citizen. But yeah, they're in China. And they said China's slamming the brakes on the EV price war. New government regulations now forbid selling cars at a loss to gain market share. So could Tesla do better than China in the future? The ultimate goal is to force automakers to stop fighting over who's cheapest and start competing on who has the better technology and service. This is actually good for China, arguably good for China. Not so much over the short term, but good for China. For consumers, this means no more smoke and mirrors. Prices and specs must be transparent. No hidden fees, surprise loan costs, forced insurance bundles are banned. Accountability contracts must have guaranteed delivery dates and penalties for delays. So you can't promise something, take somebody's money, and then not build it. There are hundreds of EV companies in China. This will be good, and it'll also, I believe, help Tesla quite a bit because Tesla's going to be incredibly competitive in this environment. Their direct sales model is already built on transparency, meaning they're fully compliant with it while competitors scramble to adjust. Yeah, okay. So I think that's a good thing, and I think it's going to kill off a lot of Chinese companies. Dalton Brewer, the Tesla tsunami is here. Elon's prediction was correct. The end of last year, literally a couple weeks from now, a year ago, the brutality of the situation will hit like a tsunami towards the end of next year, just talking about how they were going to excel. I said Tesla will do way better than Uber because they're removing the largest cost, the driver, from the equation. So Gally, I love Gally. He's one of the people that got me into Tesla. He said Uber is doing $13.5 billion per quarter in revenue with $1.1 billion in profit. So what you should do is just flip that profit down here to like way the fuck up here. Well, I guess you can't totally see it. From down here to way the fuck up here. Or way the fuck up here. And then you have what Tesla will be able to do, and they're growing so fast they'll take over this entire industry in no time. Tesla FSD can't operate in winter, quote. Tesla FSD can't see at night. They will always have something to say even when things are going so well. And again, I love these views. I love this just like really rapid view going through it. Tesla's doing amazing, guys. We're up almost 2% in pre-market. Tesla's going to break out and do really well, and people are going to eventually start to understand the future. And then we have Neuralink. The implant used in Neuralink patient is called N1 implant, also referred to as the Link. Neuralink's first product powered by this implant is named Telepathy, which enables people with paralysis like quadriplegia and from spinal cord injuries or ALS to control computers, smartphones, and other devices purely by thinking, often starting to work remarkably quickly after surgery. Here's this dude just playing a video game. Fucking insane. I put Tesla only. Why did I say this? This Waymo guy.
As we get going,
he's getting ready to go.
Give us 1 minute.
Already almost got into a car accident. Oh my God.
So the Waymo just like, oh, hey, I'm going for my destination and fucking go. This thing does not have a real brain. It's got a bunch of sensors and code. Tesla is going to destroy this. And remember Gary Black? Everybody listened to him. My view is, and always has been, that others, Google, Baidu, Pony, Amazon, will master unsupervised autonomy. Amazon around the same time as Tesla. Don't get me wrong, they have a ton of robots, but they're very specific to what they're doing. Unsupervised autonomy will become table stakes to be in the automobile business. None of these companies are doing any of this. It's only Tesla. And again, Tesla is the only operator in North America that can mass manufacture its own robotaxis. Tesla can pump out over 4,500 of these per week from Giga Texas, and at a fraction of the cost of a competitor robotaxi. How do you compete with that? You don't. Nobody does. And instead of sitting in a Waymo, you're sitting in one of the best cars ever made. Again, Starlink and SpaceX just doing amazing things. This marks 120 Starlink missions with 3,095 satellites being deployed so far this year. Over 3,000. Guys, they'll be at 14,000 to 15,000 fucking satellites in low Earth orbit by next year. And some of these have military capabilities for Starshield. So, pretty cool. Jeff Lutz, yes, Tesla. Tesla is the leader in physical AI. It has everything it takes to build robotaxis and human robots at scale. He's got his price target around $1,200-$1,300. That's about right. Again, 900 and then even higher. The rally could go even higher than that. And I don't know if it all happens next year, but I don't know. I think people are going to start to get really excited. If we start to see the Roadster, if we start to see more commercial application of Optimus, and we're seeing autonomous vehicles driving everywhere and everybody talking to Grok, and because Grok 5, 6 is out, it's just going to get really wild. Braking, Spain officially allows Tesla full self-driving testing. Cool. That's a little old. Akash Gupta talked to everyone's focused on the $400 million battery price tag. That misses the point. XAI just told you power is now the binding constraint of AI training, and most people haven't repriced what that means. They can't have these go down, essentially. And this is every place. And so this is why I think EOS Energy is an interesting play heading into this next year, even though it's done really, really well. Because I think Tesla is going to be just building at mass, trying to keep up. And I think EOS will also see a lot of orders in business, and that they'll have a struggle to keep up too, along with other companies. Yeah. He's been buying too? Oh, I didn't even know that. That's pretty cool. Jeff Lutz is probably, and you guys are probably the ones that have gotten me interested in that play. But I do think that that's what we're looking at. So he said the math, Colossus 2 needs 1+ gigawatts to run at full capacity. That's 40% of Memphis's peak summer demand for one building. Memphis's peak summer demand for one building. Grid interconnect, that's a crazy number. Interconnection queues now average 8+ years. Gas turbine delivery has stretched from 2 to 4.5 years. XAI's answer, buy $400 million in batteries and acquire a decommissioned Duke Energy plant across the state line in Mississippi. Install 7 Titan 350 turbines generating 250 megawatts and build your own substations rather than wait for the utility. They're not buying batteries for backup. They're buying time. A Megapack stores 3.9 megawatt hours at 266 per kilowatt hour. Tesla's selling 420 units for roughly $950,000 each wholesale. But the value proposition isn't that sticker price. It's the GPU sitting unpowered, still depreciating. Satya Nadella from Microsoft said it directly. He doesn't want to get stuck with 4 or 5 years of depreciation on one generation of chips. XAI has the same problem, but worse. They've got 110,000 GB200s, the GPUs at Colossus 2 alone, each requiring power to generate any return. Every day a GPU doesn't train, you're paying depreciation without generating value. That's the real cost. This tells you something about how critical the AI infrastructure is. The winners won't be whoever has the most GPUs. It'll be whoever can power them first. This is fascinating, and it ties in with our IREN and a conversation I want to have with you guys about that. Jesse, can you use FSD to and text on your... Yes. I can have my tablet or my phone in front of me and be doing stuff on it, and it just drives. Every once in a while, if I'm just being really gross, it might prompt me to pay attention, but it's so easygoing now. It's nuts. It's really amazing. Microsoft has chips sitting idle in data centers right now because they can't get enough electricity. OpenAI, Meta, Anthropic all face the same constraint. Again, Microsoft is working with Iron, right? What happens with Iron if they do a really good job at spinning all this up and they've still got a bunch of dedicated power and these guys are like, I still need more. Let's come back to these guys. They can actually get it done. Iron has done a good job spinning stuff up. I think CleanSpark's still good too. Not sure about Mara. I don't know what's going on with them. And Cypher, again, is a smaller version of that one. Mike Alfred is very much excited about. If he's excited about it, I'm excited about it. But it says, xAI's edge isn't capital or even NVIDIA allocations. It's that Musk can deploy Tesla batteries, buy gas plants, and build infrastructure outside normal permitting timelines. The 122-day Colossus 1 build wasn't a fluke. It was proof of concept that you can move faster than the grid if you're willing to go around it. The megapacks aren't a battery backup. They're a bypass. So this gets me interested again in Tesla. It gets me interested in EOS. And it gets me interested in Iron and any companies that can spin up data centers quickly and let them know that they're the ones to talk to. Shame that I don't even grok my Model Y. You should. You just do a long press. And the more you use it, especially with them tying it into navigation, and I think if they tie it into the entertainment system and everything else, and you can control the car by talking to Grok, which seems like a natural transition, I think that it's going to get really amazing and you'll use it a lot. Farzad agrees with me that for the rest of the decade, Tesla's going to beat the S&P, the Dow Jones, and the NASDAQ year to date. Totally agree. This is what I was showing for price projections. I didn't show, again, so if you look here, we're pressing right up against this line. This is what we're talking about. The potential, I think, by the end of 2027 to be at $1,700. I think that's very possible. We could hit a bubble and then go down after that, but I do think that's possible. And again, just incredible videos of what it can do. This car backed up to let the bus through. Started driving down the wrong side of the lane because there's obviously a construction obstacle here. Backs up, then starts to go forward, sees the person, hesitates a little bit, and then goes, oh, okay, they're letting me through. This is the most fucked up shit ever. A human being would struggle with this. Look at that. Amazing. And the miles that they're getting now, it's just, it's all taking off. If you don't own Tesla, you should. You definitely should. Let's go back here. So I want to continue down the AI and chips discussion. What's up, Jesse? Not much, Dylan. Mike, is Japan going to raise rates this Friday? Yes. What's the ripple effect? I don't think it's going to be much of anything, but I think it's another thing we'll get past. And I think that's good. I think the Bank of Japan rate hike decision on the 18th and 19th, that's going to be Thursday night heading into our Friday. Once we get that behind us, I think we're good. Yeah, Tesla's up 2.3% now. Fucking awesome. Autonomous ambulances with Optimus medics. Dude, so the future. Honestly, just think about this too. Think about Amazon pulling up and one of those Tesla bus designs. And there's Optimus robots that grab the packages. Maybe there's a couple of them there that are delivering to different houses. They hop back into it. It goes off again to the next one. These things are the future. So AI and chips, speaking of iron, speaking of power, speaking of all this, being able to spin up data centers, Mark put, wow, the accelerating demand for compute is real and not showing any signs of slowing down. Still early days in AI development and proliferation throughout the global economy. Iron has 3 gigawatts of secured power available for over 1 million GPUs. $5.8 billion NVIDIA latest GPUs on order and being delivered by Dell. And let me, I'll show you the next thing here. Need to jump now. Thanks for the updates. I would love 2 words on Michael Howell's end of cycle narrative. We'll watch the rest later. Yeah, I don't know if I'm in a position to talk to that. I probably need to watch his latest videos. I think we've got different viewpoints on that, and I will try and talk to it. Maybe I'll do it next week. Anyway, on here I said, and people think there's a bubble in tech and AI. So this is the forward PEs for Walmart, Apple, Amazon. So look at this, though. Walmart is 40. Costco, I think, is like that, too. Look at these other companies, though. You got Meta at 21, NVIDIA at 23. You got Micron, again, the memory sector has just exploded. They're up like 300%. What's your performance? I'm negative year to date. So not great. I don't know how much. Once we get the end of the year here, I'll probably calculate all that out like I do all the time. But it's been a really bad year for me. I was like, I think like one or two other people, I was very much invested in crypto and Bitcoin, and leveraged to take advantage of what I thought was going to be coming at the end of this 4-year cycle, and it did not work out well at all. I don't think I'm alone in that though. Anyway, so I think it's very easy to argue that when Micron, a company that's in heavy demand and the price is seeing like 300% appreciation this year, that if its PE ratio, forward PE is 12 and Meta's is 21 and Walmart's is 40, that maybe there's still room for this market to run. Let me keep going down here. I want to listen to David Sachs. He said, I appeared on Bloomberg to discuss President Trump's executive order on AI regulation. 1 second here.
Over 100 measures have already passed. Thanks for having me. The problem that we see is that you've got 1,000 different bills going through state legislatures right now to regulate AI, and over 100 measures have already passed. Some of these bills are contradictory, and you've got 50 different states running in 50 different directions.
Totally true.
That type of compliance regime is going to be very hard for small companies and startups, especially innovators, to comply with. And so what we need is a single federal or national framework for AI regulation, and that's what the president...
So we had to do this. If we didn't do this, states like California would do whatever they could to hamper and hurt companies like Tesla, companies like, XAI and Grok and all these. They would do everything they could to censor and to do all the bullshit that's happening in Europe. So we had to do this. This is great. It'll expedite the process. It'll ensure that we can build the bubble up in AI nice and bulky before it eventually blows. And again, if we get real world benefits, we can, and we see greater efficiencies, greater productivity. We'll look at some of that in a little bit. Then this bubble will not be a bad bubble at all. Talking about Grok, I love how Grok has magically appeared at the top of the list, coming out of nowhere. What a start! So if you look over here, this is let me just go back here for the description. This is 390x. He put efficiency improvement in 1 year for these AI models. The thing that I thought was fascinating, if you look over here, like the percentage of accuracy is on the left, and then the cost per task is over here. So Grok is obviously a little expensive on this one, about like $9 range, near the GPT 5.2 and the Pro versions, for some of its cost. The non-Pro version is way over here at like less than $1. So I guess these aren't very comparable. But compared to GPT Pro and Pro X High, it's very comparable in pricing, and the performance is really good. Again, some of these things X in these different tests is just starting to compete in. This is one of them, and the fact that it can perform so well out of the gate, I think, says a lot. Tesla pumping? I know, it's pretty cool, huh? 2.19%. That's a pretty good pump for Tesla. That's not a bad pump. It is a $1.5 trillion company. Gabe put, medical AI will be capable of taking over the cognitive process of medicine in under 36 months, likely much sooner. That is just a crazy fucking statement. But again, Peter Diamandis and his entire crew on the moon, what is it called? Fuck, I keep forgetting it. Anyway, moonshots. That they say the same thing. He said this trajectory isn't slowing. Logistics, how AI obtains physical exam input, regulatory hurdles and licensing challenges must be addressed, and they will be. And again, you've got a government who's very friendly to remove regulation across medical too, and lower medical costs, insurance costs. They're working on doing a bunch of stuff right now for that. This is just another area where they're focusing that energy. He said, all it takes is one municipality anywhere in the world to allow it. The data will prove the results. From there, all countries will be forced to adopt medical AI very rapidly. This will catch most people and physicians off guard. I 100% agree with this. We already know that you can get like an MRI, you can get all these scans, and AI can do a better job looking at them and reviewing them and coming back and letting you know whether you have something to work at or worry about. Grok even helped find a cancer or something that a doctor didn't find because they just fed it into it. And Elon was like, that's awesome, cool. The future is happening now. I believe medicine is going to get turned upside down. I believe genomics is. I think ARC-G is going to be a good benefact of that. Let me see if I can pull over the chart real quick before we get into AMD's CEO. But I love this chart. I still love this chart. Again, we had a nice little pop over here that ended at the end of October, roughly. It was a little less than 30 days ago, about 3 weeks ago. And then we got a drop to test back here. But we've done well off of that. We're above the 200 moving average on the weekly time frame. And we're looking to launch off, guys, all the volumes over here. If this thing goes up by some miracle up to $60 anytime this next year, I'm going to be a very happy dude. I'm going to be a very happy dude and make millions and millions of dollars just off this one play. So I think that it's just a matter of time, honestly. I think technology is going to change so quick and people are going to get really excited. Let's listen to Lisa Su, though, talk about AI and the fact that we're just getting started.
I find it kind of interesting that you go from super excitement about a technology to, oh, wow, big concern. Look, being a engineer and technologist for a long time, you see technologies and you see those that are kind of fads, and then you see those that have extreme potential. And AI is in
Tesla,
the realm of
Bitcoin,
extreme potential. The last 2 years, we've been talking about it. We've seen, sort of the advent of ChatGPT now turn into, is there a AI bubble? And I say that we're just starting to see the real utility of AI. Yes, the investments are high, but why are we all so confident that there's a payoff at the end? Because we can see, the way AI has been improving over the last, let's call it couple of years.
It's like Moore's Law. It's like it's looking at the advancement of technology and realizing that it's actually accelerating now, whereas we thought we had reached peaks. We're now going to be blowing those away.
Has been faster than any other technology that I've seen. The adoption rates have been faster than any other technology. The potential is faster than any other technology. But what
a billion people, that's what we're talking about with OpenAI, what we're getting near. And 2 years. 2 years from a product, AI didn't really exist. It was a buzzword, to a billion adopted users. And then when you look across the entire market, it's fucking huge. It's huge.
I'm here to tell you is that it's nowhere near its peak capability.
So if you don't want to listen to Jensen Huang, you can listen to his fucking cousin. And then we have my boy, God, I got to say, Amit's doing really well, man. He says he's grateful to have had the chance to speak to the VP Enterprise of AI at NVIDIA, and then also business developer at Palantir about their melding in business and what they're going to be doing in the future. I won't go into all of it, but it's pretty badass. And Amit's kicking ass, I got to say. He's doing great. David Sachs is saying Mike and I are on have differences in tech policy, but I appreciate that his recognition that this executive order is a win for President Trump and that the administration listened to the other concerns of stakeholders, took them into account, and engaged in constructive dialogue and next steps. Again, a lot of times you'll get we just did this and we didn't even talk to them. That was like all of the Biden administration. That is not what's happening here. They heard all sides of the story and they tried to account for the best path forward, and they're doing it. You got Joe Lonsdale, again, great, came from Palantir, really brilliant investor, very much a patriot. He said dropped out of Stanford to take on one of the hardest problems in construction. This Michael guy, he said his ambition and talent are a match for a great challenge of our time, making America affordable and functional. And proud to back Michael and Bob Yard, and you'll see why. So they're just talking about construction in the U.S. economy and how, if you just look at this chart over here, let me go back, and maybe I'll just let them play it. Productivity in the U.S. economy and construction sector. Overall labor productivity, construction labor productivity, that is fucking pathetic. That is absolutely pathetic. We've done nothing since the 60s. He's looking to change that. I won't go through this whole video. It's very long, but I'll probably cover the last minute and a half.
And you've seen
probably
the results. What?
Probably millions. Yeah.
So you've seen millions of blueprints. Wow. And all. You know, as an estimator, you might spend most of your time, like 80% of your time, doing this tedious measurement, quantity, scope of work stuff.
He's just talking about from an estimator standpoint, just trying to figure out what costs are going to be and all this stuff, and how horrific and laborious it is.
And we can automate the majority of those measurements.
So if you've seen tens of thousands of blueprints and you've seen
probably
the results, what?
Probably millions. Yeah.
So you've seen millions of blueprints. Wow. And all the results. So like if there's like a grizzled 70-year-old veteran who's really smart, who's seen that, like he would be really good right away at knowing here's the actual numbers, here's how to do it. And even then, we'd have to take a long time. But the AI could just right away say, okay, based on all the things we've seen, this is the range that's most likely here.
Yeah, we've literally had customers bid 3 to 5x more because of Bob Yard. Like if we save you 65, 70, 80% of the time, you can literally bid 3 to 5x more.
So we were talking about the thesis earlier that Thomas Jefferson was one of our founders of our country, and he believed in the architecture of democracy. So I'm a huge fan of beautiful architecture. How does that relate to AI? How can AI actually bring us back to some of that beauty?
It's hard to think about like craft and beauty and actual execution in these projects if you're literally just like behind on all your bids. And the bottom line is you still have to.
And you've got to think about massive costs. You can't build beauty when you have massive cost overhangs. AI is going to apply towards construction and increase the productivity dramatically. I just want you guys to understand how many different areas of this economy are being transformed in real fucking time right now. But this guy was talking about making it to where an estimator's job is non-existent and the data can just be pulled from AI. You can just have everything punched in and the data pulls up and tells you everything that you need to think about and worry about, all that. This is going to happen across every industry and sector of the economy. That's why I wanted to talk about it. Again, Jeff Lutz just talking about how it would be reasonable to conclude that other supercomputer under construction XAI Colossus 2, it would be reasonable to conclude that other supercomputer buildouts will mimic the system design and want to be multi-sourced batteries from EOC. So again, or EOS Energy, I agree with that, right? And there's some of these competitors. Do you think Sam Altman's going to want to buy Tesla Megapacks? Probably not. So that's a good post. Appreciate you, Jeff. Yeah, the permit, all this other crap, we're doing away with all of it. Yeah, we're going to be making it so much more efficient. So much more efficient. Tesla owner Silicon Valley breaking Q1 fast ranked #1 with 282 billion tokens from OpenRouter. So again, just Grok crushing it lately. That's kind of an old one though. Let's see if there's any newer ones in here. I hate how this stuff sorts. Oh yeah, I did want to go over this. I said productivity is going to explode higher in 2026. This is the latest Peter Diamandis moonshot video. And they covered a lot of stuff in it, but this is one of the slides I liked. It said OpenAI finds and AI saves workers nearly an hour a day on average. Think about that. 8-hour day, 1 hour saved, 13% of your day saved. They said a survey of 9,000 people in 100 companies found 75% say AI makes work faster and better. That number is only going to get better. Biggest time savers, engineering and data and accounting roles. Again, getting rid of all the monotony and all the hard grindy work and just having the AI give you the right results. Over 1 million businesses use OpenAI tools. And so again, this is getting more and more interesting all the time. And we talked about this before, but CRISPR deleted the extra chromosome behind Down syndrome. So we might be able to solve all kinds of diseases, and genomics is going to be a huge benefactor of that. And I'm excited for what's coming, honestly. Real quick, I want to jump into geopolitics. I don't want to miss this. Chile just had their election. So you got Argentina over here, right? You got Argentina right here, and then you got Chile right here. Red means like socialist communist in South America because they're upside down and inverted from us. So they do the opposite. So they were socialist, communist, but now they're conservative. And so they've turned blue. And what this person was representing over here is they said, we believe that Colombia is next. He said next year the right could win the elections in Colombia and Brazil. That actually looks like that's probably what's going to happen. There's a red wave, or I'm sorry, a blue wave, because we're in South America, that's going on all over the place. And then he said Venezuela will probably fall, right? Like they'll probably fall because of the barricade that we built around them that's preventing them from being able to really do anything. The confiscation of the ships, we've shut Venezuela down. So if Venezuela falls, you could see Cuba fall. You could see Brazil fall. You could see Colombia fall and have far right have an almost entirely, just think red map all over South America with countries that want to work with the United States and with business deals exploding back and forth. And the only thing that really stands in their way is Mexico, who's also, again, a very socialist communist country as of late, with kind of a drug lord dictator running it, if I'm being honest. That all goes away. And again, you can see the difference. It's the wokeness dying, right? You got the LGBTQ flags over here on the right, lost horribly. And then you've got on the left people that love their country. It's funny how that works. But you can see here that the left-wing candidate in Chile lost everywhere. Does that sound familiar? And you got Chile's new elected president, Cast, hanging out with another guy you might know, Javier Milei from Argentina. So these guys are taking it all, right? Like, this is the future. The right is taking South America. And I've said this before, but we're going to make the Americas great again. And that's very, very exciting. And again, my buddy Geiger Capital talking about it too as well. Just showing how they've flipped the map blue. It's weird to say that and be happy about it. And that we'll see Venezuela go, we'll see Brazil go, we'll see Colombia go. I think all of these are going to end up turning conservative as well. And you can have an entire continent turning conservative. What does that even look like? Just very cool stuff. Oh, there might have been something else there I wanted to talk about. Bulgaria going the other way. These guys are trying to get into the UN or the EU. Just really, I don't know what the fuck is going on there. And what else we got? Friday markets. Oh, yeah, Venezuela. Just Trump insinuating that we're getting closer to really laying in heavy on Venezuela. I think that's going to come sooner than later. And don't forget Iran, guys. Iran is still out of water, and they've got steel facilities that are protesting. There are people that are just going to be. I think Iran is going to collapse. I think Russia is going to collapse before their 4th anniversary of the war this next year. There's a lot of stuff getting ready to happen that's going to get really, really interesting on the geopolitical stage. All right, we're going to move off that, jump to Trump, and then we're going to get back over here to Bitcoin because we need to cover that for sure. Somebody said this earlier. I don't know who it was. Maybe it was JT. California is dying slowly, just like large portions of the West, I put. This is Valero. They're taking $1 billion loss to get out of California by April 26th. The company will not comply with Gavin Newsom's new mandates and instead is willing to lose $1 billion. This is going to actually hurt them a lot and create more inflation within their gas sector. Valero just wrote off $1.1 billion they cost taking away from California. The facility processed 145,000 barrels of oil per day. We're going to talk about oil more. We need to talk about oil more. We produce massive amounts of light and then medium oil, right? Not the dark, heavy stuff. But in California, they need the dark, heavy stuff. So they're buying 70% or something of their oil comes from overseas. And so we're missing a bunch of this dark, heavy oil. You know who produces the dark, heavy oil, guys? Fucking Venezuela. Wouldn't it be great if we could get cheap fucking oil from Venezuela because we got a strong affiliation with them? We could start firing them up. They've got more oil than Saudi Arabia. And then the guys next to them are doing well too. And they're just being born. They'll probably want to get in on it as well. So I could see us, instead of importing heavy crude from other parts of the world, Iraq is the biggest one that we import from. They don't seem terribly friendly some days. So why would we get oil from them? Why not get it from our friends in Venezuela once Maduro is gone? That makes tons of sense to me. It could be a lot cheaper. And again, then maybe we can start, I don't know, firing these up again. Maybe they just go to Texas, from Venezuela to Texas. Fuck California. California wants to let it all go. So look for higher gas prices in California and just more insanity in California from what's going on. But look at the United States as winning overall. So James Wood put this out. He's just talking about how insane it is that there's 218,000 Arizona voters were mistakenly marked as provided document as for proof of citizenship when they didn't, which means there's a bunch of fraud. This needs to be fixed before the next election in the filibuster. Geiger Capital, outside of the Americas, unrestricted birthright citizenship is virtually non-existent. Now, in an era of mass migration and easy transportation, oceans no longer protect us. So this says the Chinese billionaires are having dozens of U.S.-born babies via surrogates in the United States, giving them citizenship, which is fucking insane. It's insane. We've closed the loopholes on this. It's going to be really good. Martin said, so imagine one day Musk will have a robot that can get in the self-driving Tesla and can run errands for you, like getting groceries or other tasks. I'm actually expecting that by 2027. I'm going to have one of those. I might have a few. Is a 10x in 8 years? I totally agree. Yeah, 10x, pretty easy. Yeah, that sounds right. Again, there's just so many, and all of his companies are feeding off of each other. This is fucking insane. Again, another thing that wasn't supposed to happen happens. Picture I took yesterday in San Francisco of a bus billboard advertising enrollment in Medi-Cal, explicitly stating, regardless of immigration status, it's not just the truth, it's an openly advertised truth. So Newsom wants billions and billions, tens of billions of dollars from the federal government to pay for all kinds of expenses in California. And yet, what are they doing with their money? They're spending it on Medi-Cal and giving money to people that are illegal immigrants in the country. It doesn't make any sense. It's super fucking broken. We need to stop giving the state of California a lot of money and start holding them to the fire. Adam put, it's truth. I broke this story last year, and San Francisco still runs managed alcohol program, which serves 20 people. Two of these, add 2 more of these, for $5 million annually. That's a lot per drunk person. These guys must be drinking some of the finest fucking bourbon in the country. This still exists. How does this exist? No idea. State of Maine, speaking of corruption and Democrats, here's an audio recording literally saying that you could be a mass murderer in another country, but if you have an ID, nothing will be checked. You don't have to speak English. You have to get 25 out of the 30 questions right, but somebody could give you the test and you could do that and you're good to go. You can drive and then you can vote. So that's the whole point, right? The whole point is letting people vote in our elections and letting them work and giving them all the benefits and telling them to vote blue. It is not going to work. We're going to deport all these fucking people, and you're going to be left suffering because the states that embraced illegal immigration the most are going to be fucked in the arse. That's how it's going to work. P&W conservative, because all the people are going to disappear and their economy is going to shrink. It's going to be fucking horrible for them. Will Bellevue put up with the shit Seattle does? So look at this. This is crazy. Again, this is just more stupid shit. Listen to what this guy says.
Me and my buddy, we stop people here, stealing, and the cops in Bellevue trespass one of my buddy because they call him vigilante.
He was trying to stop a thief, right?
Yeah. Mm-hmm.
That's messed up.
And then here, now it's getting bad because people are stealing like crazy. It's every night people are pushing out carts full of shit and then push it down in 12 and Jackson.
Really?
Yeah, and because
they
follow them.
Because they take the bus.
Yeah, we follow them.
So they steal the shit and then they go down to the bus stop and then take their stolen goods and then get a bus ride home. And again, just a society can't live off of this. This is fucking razor wire fences around this business. Look at this. This is like a strip mall, but the entire thing has to be gated off at night to make sure that people can't get in. This is not how countries are supposed to be run. This is not how cities are supposed to be run. We're fixing all these things. Interactive polls, strong and decisive leadership. Germany, Donald Trump, 74%. MERS, the person running the country, 26%. France, Donald Trump, 73%. Emmanuel Macron, 27%. UK, Donald Trump, 69%. Keir Starmer, 31%. Canada, Mark Carney, 60%. Donald Trump, 40%. I have no idea what the fuck is going on with Canada, but isn't it really fascinating to see how polls across Europe think Trump is a better leader, stronger, more decisive leader than their own? I think it says a lot. Illegals are also given free college in Minnesota. Not my kids. They pay full price, but the illegals get it for free. This is fucking insane. All this stuff is going to go away. Also, there's the potential that Donald Trump, supposedly today, legalizes marijuana. So the marijuana stocks this last week were exploding higher, up 55% on the day. We'll see if that ends up happening. President Trump posted this. I told you all, the faith. Let's see what it is here.
Student loan fraud. Initiate an ethics investigation into Congresswoman Omar because of questions about federal tax fraud.
Yeah, so there's an ethics investigation in Ilhan Omar, and they're probably going to go deep on that one and really fuck her. I think she's going to get deported. I'm all for that. Again, the Overton window is shifting. The administration will be known for only importing immigrants that benefit this country. Why wasn't it always this way? So I was saying that we're gonna let people come into this country that benefit it. The gold card program. I don't know. Nobody's talking about this stuff. It's going to turn out really well in the end. Let's go to Bitcoin. All right. So I said the market feels a lot like this. For anybody who doesn't know, Andres Antonopoulos is a brilliant man. He was trying to explain to an empty room when Bitcoin was at $100 why it was so important. Nobody listened to him. I feel like that right now. I feel like nobody cares anymore and everybody's fucking negative and I don't even like posting on X right now. Everything I post, somebody's like, "Oh, that's bullshit. The world's coming to an end. You're a fucking idiot, loser, lost money, blah." Like everybody's so negative right now about what's happening, and I just don't see it. I see the exact opposite of that. Maybe I'm too optimistic of a person, but I see all these good things happening, and then I look at what happened with Ronald Reagan when a fraction of these events were happening, and people look at the 80s with fondness from a capitalistic investment standpoint. And I'm having to assume that that's a lot of what we're going to be looking at now, because a lot of the same people that have similar beliefs and that looked at things the same way and that are literally grafting what they're doing now based upon that time period say that we've got it better than we've ever had it, whether it's Paul Tudor Jones or anybody. Not for trading, that's the mistake most make. BTC is a long-term asset play. It is, and people should look at it that way. If you get stuck in it, just fucking hold it and work your ass off, and you'll do well. You'll eventually do well. That's just how it works. But I said the market feels a lot like this right now, talking to an empty room. A ton of people have left and are sitting in a state of depression because they believe Bitcoin's dead for the next several years because they are stuck in a 4-year cycle mode. And I don't think I think that's what people are experiencing. I don't think it's reality. These people will miss out on new highs and will most likely end up chasing yet again, or they just miss out and they just check out and go away. That's all fine, whatever. I put, this is breaking. The U.S. just unlocked the biggest Bitcoin driver in history. Congress just introduced, again, this is all about the taxes, Bitcoin for America Act. Americans will be able to pay federal taxes in Bitcoin with zero capital gains tax. Every BTC going straight into a national strategic reserve. It's brutal. IRS collects $5.2 trillion a year. Even a 5% opt-in is $260 billion in annual BTC inflows. Nobody's talking about this, dude, but this is probably one of the most interesting fucking ideas out there right now. And Merlin the trader is talking about it. You have, again, billionaire Dan Morehead, one of the earliest people in Bitcoin. It looks like we just went live, guys. The market is open. Let's see how we did on pre-market, and then we'll talk about this. So this is what it looked like pre-market. 2.3% on Tesla. NVIDIA doing well. Everything that was dead last week, all the chips coming back, except for Oracle. Again, arguably an overvalued play for somebody who's got as much debt and kind of legacy as they are. But looking good, 2.7%, 3% now on Tesla, guys, as we do that breakout that I was talking about this morning that I clearly articulated. That puts us above the .618 that I was talking about. If we close the day here, let's just see on the daily how we're doing here. If we close the day here, this will be the second time we've been at this high of a level since December of 2024. So pretty awesome stuff. Tesla is doing great. I love it. I love to see it. The rest of the space, we've got HPC and Bitcoin miners just kind of down 1.5% to 3%. Nothing too crazy there. Looks like BMNR is down 1.8%. Palantir is up 1%. Strive is up, well, barely. TLT is up about 0.5%. ARKG's up 0.3%. Looks like it's Tesla's day to day, for the most part, doing really, really well. And Argentina up at 1.5%, doing better again. Let's just tap over here again. So yeah, Dan Moorhead talking about China buying 1 million Bitcoin. This is a guy who was very early into Bitcoin, and he's done a great job with his investments. And that's why he's a billionaire. Let's listen to what he has to say.
And China has roughly the same, I think.
Yeah, and China has roughly the same. No problem seeing them wanting to buy 1 million Bitcoins. It's still tiny compared to their balance sheets.
Just think about like 250 billion in inflows just from the government in a year, just from tax revenues, if they aren't buying Bitcoin and selling gold.
Budgets, all that stuff. And so if you have 2, 3, 4, like say the GC wants to buy 1 million, China wants to buy 1 million, maybe Russia wants to buy some, US, like it's going to squeeze up like a watermelon seed.
And I think that's what's going to happen. I put in the world of ever increasing prices, which will not be fixed overnight. Even if Trump and Bessent and all these guys do a great job, the problems aren't immediately resolved. They'll take years to fix. You need to grow GDP faster than debt, and then you need to be able to slowly pull back while markets are doing well to ensure that you don't overheat and to ensure that you're able to get it to where you're on a more fiscally sustainable path. So this won't be easy, but I said, why wouldn't you want to own the best store of value invented when the majority of Earth still doesn't get it? And again, they don't get it. They don't get it because they're talking about $30 trillion gold, and they're not even looking at Bitcoin at 2. And that makes no sense whatsoever. So they don't get it. And then you even have Coinbase CEO talking about how the Bitcoin strategic reserve asset at the World Economic Forum.
The U.S. actually has reserves in lots of things, gold, oil, I think like 27 different rare minerals like palladium and all these things. And so, I think the world is moving to a Bitcoin standard for money. They absolutely should hold. Any government who holds gold should also hold Bitcoin as reserve. The U.S. actually
100% agree. This guy's turning into the new J.P. Morgan, Jamie Dimon. I don't know if people realize that, but he's everywhere. And you're going to continue to see that. And I know people love Peter Schiff, and they made so much money off of gold. And Peter's so smart because, again, at the bottom of the last bear market, or I'm sorry, the previous one, at $3,800, he told you, oh yeah, sure, Bitcoin's a bargain, but it could drop another 80% and it would still be too expensive at $750. So remember that $3,800, even if you're bitching about $90,000 Bitcoin today, that's almost 27x higher than where this dipshit was talking about how gold was the future and Bitcoin was garbage in 2018. And so you could have had, a 28x? Or what did gold do over that same amount of time? Let's go to 2018 and see where we were over there. I got to go way back. I'm on the daily time frame. Let's go to the weekly. So let's just bring this down a little bit. So we'll just pick somewhere in the middle here. In 2018, in 2018, it was probably somewhere in between here, somewhere between $1,300 and $1,100. So you would have made a whole whopping, get ready for it, guys, it's a big line, 250% or 3x versus 28x. Which one do you guys want? Can you guys tell me which one's better math? So you can listen to Peter Schiff if you want to, but I wouldn't take everything he says as gold, because it could turn out really bad for you. I just said this. I said I actually hope Bitcoin drops into the 70s. We could do that today. If you look in the bottom right corner, now we're down to 89.2. We were sitting at close to 90 earlier in the morning. Might have even got to it. And so, again, we're looking to potentially break down. But at the same time, we could just go up here. And this could be an ascending triangle. It could break down over here. So many things can happen. I can't even pretend right now to tell you where we are with Bitcoin's price. But here's what I do know. If it drops down into the 70s, if it drops 10, 15% lower, I'm a buyer of a lot of things that are Bitcoin related and AI related. And those could still go down. And again, they are right now. It looks like Cypher's down 4%, CleanSpark's down 5%, Iron's down 2%. And so those are dropping again today. Let's see over here. Got Enphase down BMNR down 1.5%, Enphase down 0.81%, EOS Energy up 0.5%. Metaplanet, how's Metaplanet doing? Metaplanet's down 1.8. So Bitcoin and AI are still getting hit today. Tesla up 4.12%. Fucking A. But here's what I know. I know that as these things go down, if Bitcoin's price drops, and again, be ready for it. It could still happen. We've got a lot of headwinds between now and the next 45 days. If that drops, Bank of Japan, whatever causes it, and we get down to here, I'm going to be a heavy buyer because you're going to be looking at Bitcoin. If you look over at this time frame, guys, and you can't see it too well here, let me, I'll do this. I'll see. Oh, it's an image. Fuck, I can't change it. But we're essentially in the bottom right corner. If I kill this, let me just kill it. I'll just get this out of the way and then go back to the image. If you look over here, you can see that we're right at the bottom on the weekly time frame. And if we drop down into the 70s, guys, then we'll be at the lowest weekly time frames in the history of Bitcoin, the history of the asset class, all at a time where it looks like we're getting a triple bottom on the Bitcoin to gold ratio. So I don't know. I think you got to be long Bitcoin right now. I think people should be excited about it. I don't know if Tom Lee is right about Bitcoin going to 200,000 in the next 50 days. Now, he must be pricing in all the headwinds disappearing that we've talked about, the MSCI, the Bank of Japan, the tariff Supreme Court stuff. He must be discounting all of this. I think that's too aggressive. I would be happy to see that next year at all, let alone in the next 50 days. But who knows? We'll reevaluate. If we get this in the next 50 days, then fuck, we got more talking to do. So we're definitely going to have a conversation. There are a lot of great things happening, though. U.S. banks are panicking over crypto, and they're saying it out loud. So again, OCC grants additional approval to Ripple, BitGo, Digital Assets, and Paxos to become national trust banks. Banks do not like this right now. Probably going to be a bunch of lawsuits about it. But the government is handing over the reins. And Brian Armstrong said institutions are moving into crypto faster than most people realize. Excited to partner with Standard Chartered to make access easier for their clients, and proud that Coinbase can be their platform choice. You got Saylor buying. You got Kathy Wood still talking about Bitcoin, Ethereum, and Solana. You've got this statement right here, guys. And again, this is one that people really hated. Well, I guess I got 148 likes out of 14 or 17,000. But this is me saying, what if we started selling gold and started buying Bitcoin more? Let's just listen real quickly to what J.D. Vance had to say about this similar subject.
But I actually think that where Bitcoin is going,
congrats, Kirby,
is as a strategically important asset for the United States over the next decade. It's one of the reasons why President Trump, with the help of our great AI guy, David Sachs, it's one of the reasons why we started the Bitcoin Reserve, because we want to start to put in motion the strategic importance of Bitcoin for the United States government.
They're not just saying this.
We know that the PRC doesn't like Bitcoin. The People's Republic of China doesn't like Bitcoin. Well, we should be asking ourselves, why is that? Why is our biggest adversary such an opponent of Bitcoin? And if the Communist Republic of China is leaning away from Bitcoin, then maybe the United States ought to be leaning into Bitcoin. And that's one of the things that we're going to be doing.
And so we know that China is leaning heavily into gold because they've increased their reserves by 200% since 2023, right? So they're buying all the gold. That's why the price is going up. And we're saying that we need to lean more into Bitcoin. I wonder what that means. Anyway, Dave W. Weisberger, he's brilliant too. He said that unpopular opinion, this Bitcoin bull market has not started yet. The proper measure is Bitcoin priced in gold, not dollars. And on that metric, there have been 3 bull markets, 2013, 17, and 2021. 2025 is not even back to the previous bull. So again, what I've been saying for a while is this hasn't taken off yet, and it's going to. And I still agree with that. Let's see. Bitcoin holdings. Wild that MicroStrategy now holds more Bitcoin than the U.S. and China governments combined. That is wild. And it's great for us because, again, if you look at companies that hold Bitcoin, compare China here. China's companies barely hold Bitcoin. They barely hold Bitcoin. We hold more than they do. And you see very quickly that the U.S. is dominating. The U.S. is dominating. These companies are all from the U.S. Well, most of them. And they own the massive majority of Bitcoin. I think, guys, and again, even Grayscale, is saying that they believe that the cycle hasn't started yet and that the 4-year cycle is officially broken and that we're going to see higher prices. Cypher down 7% now, guys. Iron down 6%. CleanSpark down 7%. I think I'm actually going to be picking up more today. So that's probably what I'm going to do. I think I am going to bail in a second. I think I'm probably going to opt out here and jump. I think we've covered a lot already. And I don't really want to focus on charts too much. A lot of them, again, we've looked at what was important. We looked at Tesla. A lot of these other charts are in a consolidation phase. All the HPC plays, the Bitcoin treasuries are starting to come out of that, I believe. They're right near their bottoms. They're getting a bounce. Palantir up 2% on the day. Again, TLT 0.5, ARCG up 1. I don't know. I think the AI and HPCs are getting hit. I think the Bitcoin and crypto stuff still gets hit today. And I think those are the things I'm going to be buying. So I hope you guys have a great day. I am going to focus on exercise and working out and eating well today. It's something I'm really focused on. What is Metaplanet doing? Metaplanet's down 1.8%, but it's done all right. Again, it's bounced. These things are off their lows. If you look over here, if anything, it looks like it was doing some consolidating in some of this range, but I mean, it had a huge gap here. It looks like down here that it's closed, and but the direction is what you want to see, right? It's going up. It's going up on the daily. Let's look at what the weekly looks like. It almost made it down to completely oversold conditions. This is an indecision candle right now on the weekly, but again, it's just starting, so let's see where it ends up. But we had our breakout, right? Like it was over here. We were sucking really bad at the $2 range, and then it was up in the $2.30 range, and then we got all the way up to $3, so a 50% increase, and now it's consolidating. I don't think that's too crazy. Metaplanet looks green to me. Well, I mean, it depends on where you're looking. If you're looking in Germany, it is, right? Is that what you're talking about? Are you in Germany? Because that would count. Anyway, yeah, I think I'm going to do some buying on those things today. And but I hope people are enjoying Tesla today. I hope ARCG and TLT actually doing a little bit better is a good thing. And again, I think markets could still go down. Be ready for that and try and capitalize off of it if you can. You guys have a great week, and I will see you on X. And again, I'm going to try and do some more stuff with these videos and make them better and maybe longer in the future, at least for the one day that I'm here. All right, I love you guys. Again, have a great start to your week, and I will talk to you later. Bye.